2 days ago, the single biggest IPO in the history of the stock market just happened. SpaceX went public, and within 6 hours, a buddy of mine made 19% on his money and basically texted me to rub it in my face. He said, "Roger, this right here is why stocks beat real estate every time. You're out there fixing toilets, and I just made a fortune sitting on my couch watching TV." And here's the thing, for the most of this video, I'm going to prove him right. In fact, I'm going to make the case for stocks better than he could ever. But I want you to stick with me all the way to the end, because there's one thing about SpaceX trade that he completely missed. And once it hits you, you're going to be able to unsee it. You're not going to be able to. I've been around real estate for quite some time and investing as well, long enough to know that there is exactly where this story ends. So let me show you. Let me start by being totally honest with you. Stocks are an incredible way to build wealth. I'm not going to stand here and pretend they're not, because that would be a complete lie. And you see right through it. So let me actually build a case for my buddy here. See, here's why stocks are so good. Number one, liquidity. He bought SpaceX Friday morning and he could have sold it Friday afternoon. That's one button. Done. Try selling a fourplex in 6 hours. You can't. Real estate is slow. Stocks can be instant. Number two, there's basically no barrier to get in. You want a piece of SpaceX, 20% of that entire IPO was set aside for regular people like you and I. Straight through Fidelity, Schwab, or Robinhood. You can own a slice of a $2 trillion rocket company with the cash sitting in your checking account right now. No down payment, no loan application, no closing costs, nothing. Number three, zero headaches. And this is the big one. Stocks don't call you at 2 a.m. about a busted water heater. No tenants, no leaky roofs, no 3-day notices. You buy it, you hold it, and you go live your life. Number four, diversification. With a couple $100, you can own SpaceX, Apple, Nvidia, and a fund holding 500 companies all at the same time. One of them tanks and the others carry you. Most real estate guys, they've got everything they own riding on 1 or 2 properties in a single zip code. Number five, the long game is proven. The stock market has averaged right around 10% a year for decades. You reinvest the dividends, you let it compound. You don't touch it, and 40 years later, you're wealthy. And you never swung a single hammer to get there. So let's be real for a second. Low barrier, instant liquidity, totally hands-off, diversified, and historically proven. If you'd never heard a single argument against it, you would walk away from this video right now thinking, stocks win. And it wouldn't even be close. My buddy is already typing his victory text. But here's the question that I asked him right back. And I want you to really sit with this one. How much of SpaceX do you actually own? He bought a couple shares at a $2 trillion company. So let me put it in plain English. He owns a rounding error. A rounding error. He has zero control. He can't change one single thing about that business. He's a passenger. He's just sitting back on the plane, hoping the pilot flies it exactly where it needs to go, which is somewhere good. Let me give you an analogy so that it really lands. Imagine you and your neighbor both want to build wealth. Your neighbor hands his money to a pilot, climbs in the back of the plane and hopes for the best. He doesn't touch the controls. He doesn't pick the destination. If the plane goes up, great. If it goes down, there's nothing you can do but watch. That's a stock. You're a passenger on somebody else's plane. Now what if instead you, own the plane, you decided where it goes, you decide when to refuel, you collect a fee from everyone else who climbs aboard. That, right there, that's the difference. And that's what I mean when I say real estate done right doesn't affect you as a passenger. It makes you the owner. And that 19% my buddy made, here's what nobody's telling you. It's just a number on the screen until he sells it. The second he sells, he pays the tax and he's out. No more upside, no more income, nothing working for him while he sleeps. Now watch what happens on the other side. Here's the one word that ends the entire debate. And if you only remember one thing from this whole video, remember this word: leverage. See, nobody banks on the planet is going to loan you 400 grand to buy SpaceX stock. Zero. They laugh you out of the building, but the exact same bank will hand you $400,000 to go buy a building, with you only putting down about 20%. So follow the math with me here. 80 grand of your money controlling a $400,000 asset. So when that real estate goes up just 5%, watch what happens. You didn't make 5% on your 80 grand. You made 5% on the whole 400,000. That's a 25% return on the money you actually put in. And if it didn't hit you yet, here's the part that should make you pretty much fall out of your seat. The tenants, they paid the mortgage down the entire time. Somebody else's money is buying you the asset. Good luck getting your renters to make your stocks, or at least pay them for you. And then it stacks. And this is where it stops being close. You get cash flow every single month. Real money hitting your bank account, not a number on the screen. You get appreciation. You get the loan paid down by somebody else. And the tax code treats real estate like royalty. Depreciation can shelter that income, so you keep way more money, every dollar, than the stock investor ever will. Leverage, cash flow, appreciation, loan pay down, tax benefits. 5 engines all running at the same time on the same 80 grand. Now I already know exactly what you're thinking. You're saying, okay, Roger, but I don't want to fix toilets. Good. You don't have to. Let me make this even easier for you. That's exactly what a syndication is. You invest passively in one big apartment deal, 20 units, 50 units, 100 units, ran by an operator who underwrites the deal, manages the construction, and deals with every single tenant. And you still get all of it. The leverage, the cash flow, the tax benefits, completely hands off. And it's the same passive income my buddy was bragging about with his stocks, except now you own a real piece of real asset that you can drive past and put your hands on. Or you go solo. You buy a fourplex yourself, you control everything, and yeah, that's where the real money is if, and this is a big if, you do it right. And doing it right is part of something that nobody on the internet actually warned you about. Because the whole thing lives or dies on 2 things: tenant screening and staying on the right side of California landlord laws. One bad tenant, one wrong line on a lease, and that beautiful 25% return on a 6-month eviction, or turns into a 6-month eviction nightmare. That is the part that the stock guys never have to think about, and it's the exact part that we live in every single day. So let me ask you again, is my buddy wrong for buying SpaceX? No. Honestly, go own some stocks. I own a little bit. But do not confuse a number on a screen with building something you actually control. Stocks make you a passenger. Real estate done right makes you the owner. So here's what I want you to do. If you own rental property anywhere in Central Contra Costa and you want to lease it out fast, and you want fast screening, qualified tenants without stepping on a single one of those legal landmines, that's exactly what we do. We do it for a flat fee. There's a link in the description. Go click it. I'm Roger. Stop renting out your future. Go own it.